Hello, everybody. Welcome to another edition of This Week in Crypto. I'm your host, Brian, alongside my co-host, Dino. We're going to be going over quite a bit here today, mostly focusing on Bitcoin and Ethereum, as most markets have been ebbing and flowing along with those two coins, particularly Bitcoin, as always. We're looking here at the price return differences for the top 100 or so market cap coins, and it's clearly a big mixed bag. And this can be, these kinds of weeks are when data can really make a difference and help you decide which projects are on the up, on the down, looking like it's making a bullish or bearish divergence, what have you. And so we'll dive into quite a bit. As always, want to remind everyone, nothing we talk about is investment advice. Everything we talk about here is objectively data backed and based on history and what divergences and probabilities are indicating at any given time. That being said, Bitcoin here, as we can see, is actually up 1.6% over the past week. It may not seem like it, as we did drop to the 29Ks just a couple days ago. That was the first time since late June that occurred. And after it occurred, we immediately saw a lot of buy the dip calls. A lot of people said, okay, this was the dip we're waiting for. We had that psychological break where we fell below 30K for the first time in a long time. People didn't think this would happen, but now it has. And buy the dip started trending. And sure enough, through, self-fulfilling prophecy or what have you, prices almost instantly jumped right back up and got to about 32.5 where it's sitting now. Ethereum also was under 2,000 for quite a while, back over 2,000 at the moment. And then we just see some various projects. FTT has had a good week. We had AXS, we had Dash, Sushi, Tel, OKB. A lot of projects that have been seeing some rising address activity. For those of you who checked out our insights, you might have seen that we did a quick highlight on projects that were increasing in the amount of activity on their network. And those obviously correlated to higher prices. And some of these were able to stand out and at least temporarily break away from Bitcoin and Ethereum and the rest of the markets to make their moves. Others were on the opposite end of things with Rune, MDX, and then a few smaller ones, Hex, Leo, HBAR, GRT. Nothing horribly that's standing out on the negative side, except for maybe Rune and MDX. But overall, it was a mixed bag this week, and that's the time when you're actually hedging your portfolio and going for different assets. This is the time that tracking the data for your asset will really make a difference, because altcoins are not just ebbing and flowing in unison like they often do. They are very much independent from one another right now, and that makes it a very exciting time. So we'll focus mostly on Bitcoin, Ethereum, and then of course take some questions toward the end. Dino, anything you'd like to add on the screener before we move on to the next topic?
Just that the screener kind of, I think, pretty well reflects the state of the market in terms of a general indecision. I think there's a lot of interesting data for Bitcoin, even though its price action isn't. There are two things that I think we should cover from, actually three things I think we should cover from Bitcoin's perspective. Number one, we should at least talk a little bit about a big spike in several metrics for Bitcoin that happened during the weekend. So a few days before the crash, there were massive spikes in exchange inflow, in H consumed. There were some, insights I saw about where this spike in exchange inflow might be coming from and whether it's really added sell-side pressure or not. Either way, it happened maybe 24 to 36 hours before the crash. And then we should also discuss what happened during the crash, because honestly, from an on-chain perspective, from the perspective of our on-chain metrics as well as social metrics, the crash didn't really work out the way I thought it would. In fact, it seems like the market was fairly lethargic about the response from the market, or the response from the Bitcoin network was fairly lethargic, given the fact that the Bitcoin just dropped below 30K for the second time in a month and a half. So it didn't seem like capitulation to me at all. And we can kind of gloss over a few metrics that point to that fact. And then finally, Brian, I think we should kind of talk about the top indicators for Bitcoin that we're looking at right now. So I basically, titled this video the top 5 on-chain indicators for Bitcoin at the moment. There are obviously more than that, but I think we've got 5 or 6 that we generally like to rely upon or look at on a daily basis, and we can just kind of, we usually do on these calls, we can give a general overview of what they're showing at this point in time. So I don't know, Brian, if you want to start, or yeah.
Yeah, why don't we start with this age consumed spike? Obviously, this is a massive one, right? The one that occurred on July 16th here, right around the start of the week. We hit an age consumed spike on the 4-hour interval of, let me check if that's, 4-hour interval of about 78 million. When, around that time, we were looking at something like 686, 1.7 million. So clearly through the roof here. Any ideas as to what made this occur?
Yeah, so if you also look at the exchange inflow chart, you will see the same spike or the coinciding spike, suggesting that there was a pretty, especially if you take a 4-hour interval, I think. It should help clear out some of that noise and show it a bit more clearly. There we go. So that's the spike, that massive one before the drop. It coincides with the spike in age consumed. And then if you look at Bitcoin's network realized profit loss, there was also a massive spike there. So network profit loss is a metric that essentially tracks the average, it tracks the total ROI of all daily transactions. So when there's a spike in network profit loss, it indicates that on average, coins that are moving on the blockchain are at that point in time moving at a significant profit relative to the last time they moved on the blockchain. So all of these metrics all of a sudden started going haywire. So it was just one isolated event, but I mentioned it in our weekly coverage, in our weekly report, where I said, even though it's just one move and we're not exactly sure, what caused it, spikes in age consumed like this, they sometimes tend to coincide with, or sometimes tend to mark periods of increased price volatility in the future. Because what age consumed spikes basically mean is that a significant amount of previously dormant coins are moving on the blockchain. In other words, holders or hodlers are waking up. And sometimes during stretches of price consolidation or price ranges, you're waiting on large moves like this to let you know that there's going to be a shakeup in the market. So I think that's kind of what happened. Now, as far as what was the culprit for this spike, I have seen some reports suggest that it might be tied to internal reshuffling of Coinbase wallets, but it wasn't yet confirmed. Our devs were also looking into it. We, as of yet, don't have an update or can't fully confirm exactly what caused it. According to the charts, at least, there was a significant spike in the amount of BTC moving to known exchange wallets, and that BTC has been very, very old. Basically, it has not moved on the blockchain for an extended amount of time. So if you look at exactly how big that move is, it's one of the biggest upticks in all of these metrics since the crash. So even if it's just a single solitary spike, I think it's sort of indicative of some holders looking to kind of being tired of the market action overall and looking to take advantage of it sooner rather than later. So that's as far as I wanted to discuss. You can read more about these several upticks in a variety of our metrics on our weekly report. I think Max can share it in chat for those that are interested. So yeah, I mean, we'll see. I can already see that Vahab is saying that it was about 13,000 BTC moving to Coinbase Pro. Exactly, Vahab. So that's the spike I think that we're discussing right now. The point that I'm making is that I have seen some reports suggest that these might be coins that are moving from an unlabeled Coinbase wallet to a labeled Coinbase wallet, which would obviously be a very different context. Now, like I said, no reports as of yet that I have seen have confirmed this for sure, 100%. Our devs also haven't been, we're looking into exactly what might have caused the spike, but there's no guarantee or the confirmation, at least at this point, with 100% certainty that this spike might have come from a Coinbase Pro wallet. So anyway, a move is a move, right? Even if it's suggesting internal reshuffling, it's a massive one. that we haven't seen throughout any part of the correction so far. So these types of spikes in on-chain activity, I think, can make or break a rally sometimes. And the fact that it happened about 36 hours before the crash, at least is curious, if not expected, right, Brian?
Absolutely, yeah. And the network realized profit loss spike that occurred was the largest we've seen since around, well, it looks like all the way back to April 18th. And you can see when this spike happened, we had a big drop very close afterward. The big spike before it actually was preceding a big rise, but eventually that led to a drop off too. Generally, these big spikes are preceding drops more so than the other way around. This one, of course, preceded a big drop. This one was more of a small drop followed by a rise. But long story short, they're definitely an indication of market shifts. And to go along with exchange inflows like this one had, I mean, this one literally was on the same time as the exchange inflow spike occurred. Clearly, it was due to the 13,000 BTC moving to Coinbase Pro. It's generally going to be a bearish sign. And it ended up being a small drop, of course. It wasn't a massive one. And now we quickly bounced back up. But now the question is are we going to see another one of these spikes? Or are we going to start seeing, some negative exchange inflow and very low types of spikes that might indicate that we're going to rise? So that's why this kind of data is so important.
Yeah, I agree. I think this is where, Brian, we can segue into exactly what happened during the crash, because I thought it was quite interesting. So for the first time in more than a month, we dropped below 30K, and the reaction or the impact that the drop has had on our metrics, to me at least, was very interesting, because there wasn't much of one. Like, there wasn't much of a response. If you look at exchange, okay, let's look at exchange inflow first, which would suggest, so for those that aren't familiar with the metric, exchange inflow essentially looks at the amount of Bitcoin that are moving on the blockchain to known exchange wallets, right? So when there's a spike in exchange inflow, what that would suggest is that there might be an elevated sell side pressure. So you've seen a massive spike or a cluster of spikes of exchange inflow for Bitcoin right around the start of the correction, suggesting basically large scale capitulation, one of the biggest capitulation events in Bitcoin's history. And like we already mentioned, there was this massive spike in exchange inflow a couple of days before the crash. Now, if you look at what happened during the dump itself, yes, there was a slight uptick in Bitcoin's exchange inflow. However, this is where you also need to consult with Bitcoin's exchange flow balance, which is essentially the net flow. And Brian, if you can show what exchange flow balance looks like for Bitcoin, this is a metric that tracks the difference between Bitcoin in and Bitcoin out of exchange wallets. So there we go. So you see this massive spikes in exchange flow balance that happened around 36 to 48 hours ahead of time, ahead of the crash. This was the spike that we talked about a minute ago, this massive inflow of coins to Coinbase. However, during the crash itself, there was no massive spike in Bitcoin-related exchange flow balance. In other words, even though there was a spike in exchange inflow, there was a correlating and possibly even more significant outflow of Bitcoin from exchanges. All of which points to the fact that there wasn't a mass, network-wide rush to sell BTC at these levels. Usually, like for example, look at May 14th to May 17th. There was, just as the correction started, there were several major instances of spikes in exchange flow balance, all of which suggested that, on average, the crowd was panicking. The holders were panicking, not just the crowd. And in general, we were looking at a massive period of panic sell-offs, FUD-induced trading, and overall people looking to reduce their exposure and mitigate risk. We have not seen that same reaction during this crash. It seems like, for whatever reason, the crowd wasn't, the holders in general weren't that concerned about Bitcoin's drop below 30K at this point in time. Also, if you look at Bitcoin's net profit loss, which is another metric that essentially tries to sort of evaluate the same behavior, except when we're looking at net profit loss, what we want to see especially during these dips in market, we are looking for major dips in Bitcoin's net profit loss, similar to the one that happened at the end of May here. So you can see several large drops in Bitcoin's net profit loss between May and June, July, suggesting that on average, coins that were moving on the blockchain at those points in time were moving at a loss on average relative to the last time they moved on the blockchain. So that would suggest that people were selling their coins or their bags at a loss. Some of these may not look that large because we're only looking at the last 6 months, but they are actually some of the biggest dips in Bitcoin's network profit loss in history. They were massive capitulation events. Some of the largest offloading of BTC at a loss relative to the last time they were moved on the blockchain ever. And then you fast forward to this drop that we have during the midweek on Tuesday, where Bitcoin dropped below 30K for the first time in more than a month, and you don't see the similar or the same the downtick in Bitcoin's net profit loss. Sure, there was a little bit of a downslide at the 29.1K level, but it was nothing compared to what we've seen at the first leg of this correction. Once again, suggesting that the holders were relatively, I think they were staying put. A lot of things that I saw from a technical perspective and from technical analysts that I follow was that the level that they were really looking for as far as support that needs to be broken before they react was around 28K. So to me, what I think might have happened is that even though we dropped to 29K, wasn't enough for people to start liquidating their assets and in general reducing their exposure in BTC. Whether that level would be 28K or something lower, overall, it doesn't seem like the 29K, the drop below 30K was really considered bearish for a lot of folk. The last thing that I want to mention as far as the drop and how the crowd reacted to the drop is, Brian, if we can look at the social sentiment for Bitcoin during this dump below 30K, I thought that was maybe probably better to look at it on graphs, Brian, just because we can smooth it out. I thought that was maybe one of the most interesting of all of the metrics, because usually when you see these large drops in market action and a price of a particular coin, you would expect to see crowds sort of start to panic. So Brian, if you look at the change from 1-day interval to 12-hour interval for Bitcoin and just smooth it a bit to the left so that we can see it a bit more clearly and reduce the noise, you will see, as Brian scrolls down here, you will see a significant uptick in the average sentiment towards Bitcoin during the midweek. So like Brian said, there were a lot of buy the dip calls after Bitcoin dumped below 30K, suggesting that the crowd as well was not very concerned about the drop. In fact, it seems like even the general retail sector was fairly bullish about Bitcoin's chances of recovery, of a relief bounce or bounce back in general. So if you look at Bitcoin sentiment during the first part of the crash in May, you can see similar spikes in Bitcoin sentiment. This was, obviously they were more massive compared to this one. This was also sort of a part of the correction where the crowd thought that we were going to easily return or come back from a deficit that we were at that point experiencing. It did not happen that way. And as soon as the crowd realized that 30K is the new low, or sorry, the new now, we started seeing a massive drop in the average sentiment towards BTC. However, the latest drop has not prompted the same reaction from the market. So in general, I would have expected a more dramatic drop in Bitcoin sentiment to maybe a lowest point since the start of the rally, suggesting that the crowd was very, very bearish and thought that, BTC was going to drop down to 20K, 15K, whatever. Exact opposite happened. A lot of people saw this as an opportunity to buy the dip. A lot of people saw this as a potential for market-wide recovery. So all of this, to me, at least from the perspective of some of the data points that I've been keeping an eye on, it doesn't really reek of capitulation. It doesn't really smell of fear, uncertainty, doubt, and general sort of panic-induced sell-offs. So Whether that's good or bad, I'm honestly more leaning to the fact that it's not that good. I would actually prefer to see large spikes in exchange inflow, large dips in net profit loss, massive drop in the average sentiment of the retail sector, all of which suggest to me that this is a painful event for the market in general. This was not a painful event for the market in general, and sometimes you just need to shake out those weak hands, and it doesn't seem like that's what happened during the midweek crash, Brian.
Yeah, absolutely not. I think that a lot of people decided this was the time to buy the dip. They allowed that to come to fruition, and now we're sitting in another polarizing time right now, back in the negatives again. And we're going to see how this plays out, whether we're going to start seeing consistent spikes like this down in the negatives, or if we're going to start getting euphoric and there's like a little trickle up to 33, 34 again, and people start to decide that this is the time to get back in, and you see a wave of people getting very positive. So this is a fantastic chart for anyone looking to get a quick snapshot of how the crowd is feeling about Bitcoin, Ethereum at any time. Obviously, watch out when they get too euphoric, and buy with confidence if they're getting too negative. That's generally how this works out.
Yeah. Okay. So I think, Brian, probably the best way to segue this discussion into, I already see you've kind of got it loaded up. So if we can kind of, obviously feel free to talk about daily active addresses and other things that you got prepared, but if we can talk about or you can talk about the 5 indicators that you're really keeping an eye on at this point in time as far as Bitcoin is concerned, that would be a good way to sort of narrow the discussion into some of the more important metrics that on our platform, at least, we're paying attention to at these levels of market action.
Will do. So I've got 3 of them right here. Daily active addresses, volume, and social volume all play an important role when it comes to predicting future market ebbs and flows for Bitcoin or any asset you're looking at. I'm going to highlight one at a time here to show you what's going on with daily active addresses. We clearly see a continued decline going on, particularly right before we had this big drop off. I'll take them off for now so I can show DAA by itself. Check out here, right, where we were starting to get a little bit of an uptick, and when that occurred, we had a slight rise in early July, but ever since then, it went right back to staying low. Notice how on this day, July 10th, we had a sudden drop to around 698.86K. That had been the lowest since June 27th. And when it occurred, we almost immediately had this big slide down. Then it started to stabilize, and then we had a big slide down again here, kind of to start the week, or just about a week ago on the 16th and 17th. And then immediately after, that's when we had this big drop again. And that's when daily active addresses rose. Long story short, you want to try to avoid seeing a long-term slide like this. Clearly, ever since the all-time high where we hit the next day the largest amount of daily active addresses in over 2 years, might have been longer, that was kind of the key to the beginning of the top for daily active addresses. And we can look here, we have an indicator for it called adjusted price DAA divergence. And this is kind of a midterm look, and it's showing that even though DAA has been declining, the divergence for it has been growing more in favor of the bulls, because price has fallen way, way more than the more mid-sized drop of daily active addresses. Now, of course, take this with a grain of salt, because it's very, very, very macro. And if you're looking at something like this, you don't want to just think all of this time is bearish just because the price was rising, and then all of this is bullish because the price dropped. But notice the gradual rise in the green, right? So even though this is all considered bullish based on this time frame, the fact that it's getting a little more bullish means that price is still declining a little more than daily active addresses are declining, and that's a good thing. Either way, though, it's probably not going to be changing anytime soon until daily active addresses start to show, consistent rising for multiple weeks. So that's how I'm seeing the amount of unique addresses interacting on Bitcoin's network at this moment. Now, going back to the other two that I was showing, trading volume, it's pretty much the exact same thing. We kind of hit a huge peak right on May 19th or so after this big drop off. And ever since then, when we didn't have the bounces that people were hoping to see, trading volume has slid significantly. And it's now quite small. We're at 26.28 billion in trading volume on 4-hour intervals. At the peak, we were at 126.35. So quite the contrast there. We would definitely want to see, for this bounce, we had a very minor trading volume rise, but it was not significant enough to say, okay, everyone is hopping on and they're going to start buying into this bounce, right? Trading volume tends to signify whether any trend is going to continue happening. If the trading volume is rising as price is rising, it means that price has a good chance of continuing to rise. If trading volume is falling as price is rising, it means that there's probably not much interest in that current trend pattern. So that's how we look at trading volume. Last thing I'll show on this chart is social volume. And social volume did just have a bit of a spike here. It wasn't a huge spike, but considering the amount of social volume that was happening around it, this would be considered pretty big. And it was likely related to the buy the dip trend that we were talking about, where a lot of people were getting very excited, thinking that now that we got below 29K, that was the social signifier or psychological signifier, I should say, that it's time to really buy that dip hard. But since that time, looking at this very latest social volume bar, nothing really significant here. So basically the three that we just looked at, social volume, trading volume, and daily active addresses, in tandem, when they're all going up together, that's an extremely bullish sign. If they're all declining together, it's a fairly bearish sign. Not a perfect indication by any means, but those are definitely three of the top ones that we like to look at in terms of future price movement that will result. Right. Anything you want to add on that, Dino?
Yeah, just two things. Number one, the spike in social volume actually happened after the recovery started. I think it's probably more connected to Tesla comments from Elon Musk suggesting that they are going to. There's a good chance that they're going to start re-accepting Bitcoin as a means of payment for Tesla. There was there was a discussion between Elon, Jack Dorsey, and there was one more person. I forget her name.
Yeah, we had a question about that. It's the B word conference, I believe.
Yeah. So it was the a general sort of spike in bullish sentiment that I think was also related to this that we saw a minute ago, where the crowd was. That being said, that spike in bullish sentiment happened before the conference, so it actually happened during the crash. However, it lingered because of the conference, I think. So both of our social metrics have kind of spiked in connection to that announcement, which isn't necessarily great. So I definitely agree that when you see declining daily active addresses and trading volumes, it's not necessarily a great sign, because it just doesn't show a whole lot of demand for the coin. Social volume a bit different. Social volume, as it's declining, it's not necessarily a bad signal for the coin, simply because it suggests that it might be a little bit flying under the radar. And according to some of our backtests, when there are massive spikes in social volume, especially as the price rises, it usually suggests that the market is becoming a bit too euphoric for its own good and is becoming a bit too overconfident. And as a result, we might see an elevated risk of a correction. This is probably a short-term uptick just because of the conference. As far as what I think that is going to do to the price action, if the bullish sentiment continues to if it shows sustainable rise over the weekend, I think that's actually not a great sign. So if the crowd becomes more and more, emboldened by Elon's comments, not ideal for the market. I think we're still sort of at least from my end, I'm still waiting for another sort of major capitulation event before I can say, all right, weak hands are out. We have successfully flushed them out of the market. So yeah, that's at least as far as I would how I would interpret that spike. One thing, Brian, before you continue, guys, there's a link, or sorry, there's a line at the bottom of the stream that says if you want to ask us questions, you can do that through the Raise Sentiment page. Max, if you want to also share the link in the chat for people. And Brian, if you don't mind me sharing my screen for just a second to show people how they can do so.
Sure.
All right, so this is raised/stage.santiment.net. It's a page that we built. It runs on a Rinkeby test network. So you just connect your MetaMask and you move it to Rinkeby, like I did, and you can claim YSAN tokens that essentially allow you to ask us questions in a more decentralized way. This is just a proof of concept. In the future, we're planning to introduce this to the mainnet, but for now, it's just all on a testnet. So no need to worry about anything. So the way that it works is pretty simple. You claim your SAN tokens, you can enter whatever you want to be as your author name, and just ask us a question. By question, I mean after our Bitcoin and Ethereum discussions, usually we get into audience Q&A, and people ask us questions about different coins that they would like us to analyze. They ask us questions about the market as well, but especially I suggest that if you have specific assets, specific coins, tokens that you would like us to do some impromptu on-chain and social analysis on during the stream, ask us here. So basically just claim your tokens, say what message you would like us to, what coin you would like us to analyze. For example, this is what we got, I think last week, what the metrics show for OXT. It has been ranging for nearly 2 years. And then the amount of sand that you would like to burn, and just click submit. So during the stream, any questions that we get on here, there we go. Mohammed has already asked us. Any questions that we get during the stream, we will be sort of answering after our general exposition about Bitcoin and Ethereum. So link is in the description. Link is both in the description of this video and in chat. If you want to ask us this way, I think it's a better, sort of more coherent way to ask us any questions that you want. It also allows us, like, you can also ask questions about specific coins after the stream, because this page, it runs throughout the week. So whenever we get questions during the week, we can prepare something for these weekly streams. So even if we don't get to all of your questions at this point in time, we can also make some of those as daily write-ups during the week. So your questions will get answered. What I mean is your questions will get answered if you ask them here sooner or later. So just play around with it. And Brian, sorry about that. Feel free to go back to your analysis of BTC.
Maybe we can address Muhammad's question now, as it's kind of related to what we were just talking about, I think. It's about the BTC conference, and if there's any price movement after the crash connected to it.
I think it's, I've seen it reported everywhere. So I probably think it's contributed a little bit to the recovery. So like, I'm still sharing the screen, right? Yeah, I am. So like Brian showed a minute ago, you see the spike in social volume. It happened after the crash. It happened maybe 24 to 36 hours afterwards. So I think that the conference is the main culprit for the spike in general activity towards BTC. I don't personally like to see these types of upticks, because it suggests that the crowd is becoming a bit too confident. And if we look at the average sentiment of the crowd towards Bitcoin, let me show the 12-hour interval once again. You will see a spike that started at the dump at the bottom, but that also sort of permeated throughout the conference as well. There we go. It just started to move back down over the last 24 hours or so. By the way, this is probably going to be, narrowed down a little bit, probably to this level once the day is over, because it aggregates data on a daily level. So yeah, I mean, if you look at this uptick, it started at the crash, but it also continued during the B-Word conference. In general, I think both of these metrics of ours from a social perspective suggest that the crowd was very much attuned to what Elon Musk was saying and was pretty bullish about general conclusions of the conference. personally, I'm not a huge fan of seeing these types of spikes because it suggests, like I said, that the crowd is becoming a bit too confident for its own good. Like I said, when you see these types of market-wide crashes, you would expect a large drop in the average sentiment of the average trader. The exact opposite happened. So, I don't think, and just looking at the history of Bitcoin social sentiment, large spikes in, or especially sustained spikes in sentiment of the crowd, so progressively bullish sentiment in increasingly high social volumes, are not necessarily, or haven't in the past at least, been super conducive to price rallies. Like I said, they suggest the crowd is becoming too cocky for its own good, and at these points in time, whales start taking some of the profits. In general, we are seeing markets turn on their actors. So, long story short, I think it definitely impacted or sort of had an impact on the recovery. From a metric standpoint, it clearly led to an uptick in all of our, or two of our most important social metrics, social volume and social sentiment. Hopefully, that uptick now dies down and it was just a one-off like we've seen here, for example. So this is a spike in bullish sentiment that happened when Bitcoin was announced as legal tender in El Salvador, right? It was another sort of point in time where the crowd was very, very bullish about BTC. Luckily, however, it didn't last for long. So first of all, I mean, Bitcoin was unable to sustain this 37 or 38K level at that point. And once we dropped back down to 35K, immediately the average sentiment of the crowd dropped pretty significantly, and it stayed that way for a while. So what I'm hoping for, just from a sort of midterm perspective, is that we are going to go back into the worry zone for the average trader, because from a historical standpoint, prevailingly bearish sentiment has been more of a friend to Bitcoin and other cryptocurrencies, at least more often than a predominantly bullish sentiment. Hope that helps, Mohammed. All right, Brian, feel free to share your screen whenever you're ready.
All right.
Yeah, Kathy Wood. Thanks, Wahab. Wahab is on point today, man. Answering all of the questions that I'm not sure of.
Okay, so for those of you who check our YouTube consistently, you may have noticed that we have an update on NVT that I did 15-minute analysis of last night. NVT right now, for those that don't know, by the way, it's a measurement of how our token circulation looks for Bitcoin compared to the current market cap. Higher is bearish, lower is bullish. If they are above the trend lines here, as they clearly are still, this is a bearish signal. We aren't getting nearly enough token circulation to justify where the market cap currently is. Of course, it's only one indicator out of many and shouldn't just be considered the end-all be-all metric, but it is indicative of the fact that we aren't quite where we should be in terms of the amount of unique tokens moving from one address to another on a given day. Right now, we are in a pretty rough spot. It clearly shows throughout the week, yesterday, 2 days ago, 3 days ago, these were all really poor outputs compared to what you would typically see for us being at the 30 to 32K price level and where the market cap currently sits. The all-time high hit during the second month of red, and it's generally kind of an indication of how the next month is going to go in terms of average price. So, at the end of March, we were at 58.9. This was the first time we had a bearish bar. The next month was lower, even though we did hit that all-time high temporarily. I understand that, but it is a leading indicator. For those who think this is a lagging indicator, it's not. This definitely has enough validity and proof and evidence that whatever the bar color is for one given month, the next month generally follows most of the time. Not perfect by any means, but green generally here, right, will indicate that the price will rise. Still green, price will rise again. And then it finally hit red in March. It indicated that the last price on March 31st would be higher than the last price in April, which it was. And ever since, the last price has been lower than the previous. So very good indicator here. If you've got your Sandbase Pro membership, just plug in your API, go to add-ons, download Sandsheets, and then add your API key here, which you'll see in your account settings. Another thing I want to show would be mean dollar invested age. Nothing new to report if you've been following our previous calls. We're just seeing a continued rise in the mean dollar invested age, which measures the average age in which dollars invested in Bitcoin are at a given point. The reason it's important is when new dollars are being injected into a network, the mean dollar invested age line will tend to drop. If things start to become dormant and stagnant and people aren't really moving their coins, whether they be old or new, the way they were, that's when you see this rise here. And when you see a constant rise combined with flat or declining prices like we're seeing now, it means that it's justified. It means that the movement here, or the movement in price, I should say, matches the amount of dormant, increased dormancy that we're seeing in Bitcoin's network. We're seeing the same in Ethereum's network here in pink. Both are kind of moving up, but especially on the Bitcoin end, look at this sharp rise that has brought us all the way back to where we were back on February 9th, being the last time that the mean dollar invested age was, above 223 days on average. So nothing new there other than to say that things are still becoming more and more stagnant right now. And we're not seeing any flattening out other than like one specific day where it temporarily, occurred. And this actually happened right when, that age consumed spike and the social volume spike, age consumed spike and the exchange inflow spike occurred. So that could have been why there was just a temporary blip and the dormancy stopped just for, half a day or so, and then resumed back to this rising pattern here. Last thing on my end, and then we can start to take some questions, I think, Dino, is just our development activity, which we don't often look at on our This Week in Crypto calls, but we do have an interesting pattern right now, not so much in Bitcoin, but at least in Ethereum right here. Because of a conference that occurred last week, Ethereum's developers aren't really around as much as they normally are at this time. And that's caused the development activity to actually drop to the lowest daily output in terms of GitHub submissions that are notable since January 4th. So this is a little over a 6-month low in terms of development activity. And to give you guys a sense of just how much development activity tends to rise for Ethereum over time, I'll show you the last 5 years here. Try that again and actually put it in the year column. There we go. So yeah, clearly the last 5 years show that there is a rising pattern, but this latest drop is pretty uncharacteristic and not something we typically see. Overall, I like to look at development activity as a nice validator as to whether the asset that you're putting your hard-earned investments into is something that the coders themselves, the people working on the project, believe in and want to improve over time. There are plenty of projects out there, I won't name them, that don't look anything like this, and they tend to be very flat without a lot of good sign in terms of their developers trying to actively improve the coin. That's where you have to unfortunately worry about things like exit scams if it is flat or declining even. So always keep in mind development activity as a key metric for ensuring that you're in a coin that the coders themselves believe in and are trying to actively improve.
Yeah, I mean, it's funny, right? This drop in development activity is clearly because of ETHCC. We have seen, the second largest drop was on January 4th, basically, actually between like January 1st and January 5th. So it was during New Year's. So, I mean, it quite clearly shows that outside of several sort of points in time where the Ethereum team is busy with conferences or whatever, it's very clearly actively working on the project and the product itself. Obviously, there's a lot of sort of hype in anticipation about the APE 1559 that is due, I believe, August 4th, if I'm not mistaken, and a lot of different ETH 2.0 expectations. So I definitely wouldn't take this as a bearish signal or whatever. It's just because of the fact that most of the developers are indisposed talking about the future of Ethereum in Paris. I mean, you have seen the same thing, I believe, in 2019 when I was at DevCon in Osaka. It was the same drop in Ethereum's development activity. Not just Ethereum's, but pretty much every other project that was there, including Santiment, experienced a massive drop in development activity during that month because people were just, talking to other developers during DevCon. So nothing to be, I think, concerned about here. It's just a momentary drop because of other business-related matters.
Yep, I agree. This isn't so much a metric that has direct alpha to the price. It's more so something that, over months and months or even years and years, you simply want to look at as a validator to see if it is indeed rising, as most climbing price projects should be and will continue to be.
Yeah. Thanks, Brian. All right. I can share my screen now if you want, Brian. Let me take over. Yeah. All right. So it doesn't seem like too many questions on the Raise app. So guys, if you are interested in us looking at specific coins, just type them in chat. I've already seen at the start of the stream, I've seen a question about Polkadot. Maybe there are other coins that you would like us to analyze during this stream. I know the Raise platform is a little bit more resource intensive and it takes a bit more work. So if you just want to ask us questions about specific coins, type them in chat and then we'll select the ones that are the most popular in chat. If that's Polkadot, sure. I would suggest, especially if you guys are interested in any Ethereum-based coins, to write them in chat. So why I'm talking about Ethereum coins in particular is because we provide full on-chain coverage, or Sandbase provides full on-chain coverage for all Ethereum-based coins. We don't, at this point in time, still have on-chain data for Polkadot. We can look at Polkadot from other perspectives like social volume, social sentiment, development activity, all these unique metrics that are available at Santiment, but not from an on-chain perspective. So if you want us to do, on-chain analysis as well, look at things like daily active addresses, the dynamic of a coin's exchange wallets and whatnot, make sure that it's an ERC20 coin. All right, that's gonna be as far as a plug that I wanted to mention before people start asking us questions in chat. All right, one other thing that I want to mention before we get into questions while the chat is spamming their favorite coins is, so we've covered several on-chain indicators for Bitcoin during this stream that I think are important. Brian did a great job talking about NVT, which is still very low because of low levels of value transfer on the network. He talked about daily active addresses, which are declining. He talked about mean dollar invested age, which is rising, suggesting that there's not a whole lot of increased activity on the network. One thing that we should also kind of talk about, at least briefly, is Bitcoin's MVRV ratio. So for people that are unfamiliar with MVRV, what it is it's an on-chain indicator that attempts to track the average profit or the average loss of all coins that are moving on a blockchain in a specific time frame. So for example, if we take a look at Bitcoin's 30-day MVRV ratio, it currently sits at -1%. What that means that on average, the loss of all addresses that have acquired Bitcoin in the previous 30 days is -1%. So basically, they're just below break even. Short-term Bitcoin holders are just below break even at this point in time. Now, if we look at Bitcoin's 365-day MVRV ratio, it is currently at -12%, and it went down as low as -20%, which was the lowest since the start of the rally, suggesting that long-term or longer-term Bitcoin holders, all addresses that have acquired Bitcoin in the previous 365 days, are -20 and now -12% down on their initial investment. So they're basically experiencing relatively significant pains. Now, the way that people use this metric, on-chain analysts use this metric, is they look at historical patterns and they say, all right, let's look at the last 5 years of Bitcoin. Let's take 6, it's fine. And let me just set everything up here. All right, so this is the last 6 years of Bitcoin's 365-day MVRV ratio. So the way that people use this metric is they look at historical highs and lows. So on average, as a rule of thumb, the higher the MVRV ratio gets, the more likely it is that people are going to start claiming profits, because the higher the MVRV ratio is, the more unrealized profits there are, assumedly, and therefore the more risk there is that people are going to start claiming these profits and applying negative or sell side pressure and dumping the coin in the process. And then on the other hand, the lower the MVRV ratio is, the more holders are below break even and the more undervalued the coin is according to this metric. So the way that people sometimes use this metric is they look at, okay, historically speaking, what are sort of established top zones or danger zones and the established bottom zones or potential bounce back zones for a coin. And now looking at Bitcoin's, and I'll show Ethereum's MVRV ratio as well because it's kind of interesting. Looking at its 365-day MVRV ratio, we can kind of see that it's peaked at relatively same points between in 2019 and 2021. Here, obviously, in 2017, it rallied even further, but it was clearly unsustainable. It only lasted for a couple of days before we dumped from, what is this, like 200% to about 130%, and here we peaked at about 120%. So this was already, clearly unsustainable levels of Bitcoin's MVRV ratio. So at this point in time, we could say that anywhere between sort of 90% to 120, 130% has been relatively, safely established as a danger zone for Bitcoin in terms of its holders holding, having lots of unclaimed profits that, should they start claiming them, and there's high risk that they will because they are just sitting on their money and they're becoming a bit more concerned about potential corrections. Should they start claiming their profits, they could dump the market. And then on the other side of the aisle, if you look at Bitcoin's current 365-day ratio, it is pretty low. Now, looking at, let's draw a line here. Looking at this level, we could say, all right, around 20%, there has been sort of a one relatively established bounce back zone for BTC. We can see it here, here, and here several times in the past. It has sort of acted as support for Bitcoin's 365-day MVRV ratio. However, it is still not near its historical lows. We have dropped to as low as minus 40% during the coronavirus crash, although obviously that was fairly unsustainable and we immediately started to recover. And then we also dropped during the bottom of the bear market in 2018, dropped as low as minus 50%, but similarly, it wasn't very sustainable and it marked the end of the bear cycle and the start of Bitcoin's recovery. So historically speaking, this 20% level, which we experienced during the crash on Tuesday, is relatively significant. And it's nice to see that it has been able to hold. So we've gone to minus 19% and we've bounced back to minus 12%. If you look at Ethereum's MVRV ratio, and we'll look at the last 5 years as well. Sorry, 6. Let me show you. This is, there we go. So Ethereum's 365-day ratio also dropped to its lowest level since the start of the rally. It just fell below break even. So we can see that Ethereum has a sort of established bounce back zone or sort of a support level here at around minus 30%. It happened during the coronavirus crash, end of 2019, as well as the March-April bottom of 2018. The second sort of support level would be all the way down at around minus 50%, similar to Bitcoin's. So Ethereum has, long way to go before hitting historical lows as far as its long-term MVRV ratio is concerned. However, both coins do look healthier than they looked in May and they looked in April and March and February. So the MVRV ratio for both of the top caps has certainly normalized. It's now actually negative in lots of cases, suggesting that theoretically speaking or technically speaking, we're slightly undervalued according to this indicator. However, we're not still sort of nearing historical lows, at which points we could say, okay, definitely, like clearly we are in a massively undervalued territory and it might be time to accumulate. We're not there yet. but it's definitely more more optimistic than it was during the heyday of Bitcoin's rally. Like I remember, right, when we were looking at Bitcoin here in in January and February, I remember clearly during our streams, I even said right here, like, yeah, Bitcoin might be, especially here, where I was like, Bitcoin might need to chill out for a while. It didn't happen immediately. Like, sure, there were some massive normalization events, but it lasted a while before it inevitably crashed. But at this point in time, we're clearly so much healthier from an MVRV perspective than we were in any point during the January to May rally. There is a little bit more, unfortunately, room to drop before we can clearly say that we are in an undervalued territory, but it's looking healthier. That's there's not a whole lot of, I'll be perfectly honest, there's not a whole lot of bullish indicators for Bitcoin in terms of its on-chain data right now. We have seen daily active addresses drop. We have seen mean dollar invested age rise. We have seen NVT suggest that there's not a whole lot of value transfer going on the network compared to its market cap. So at least Bitcoin's MVRV ratio is somewhat looking healthier than it did 2 or 3 months ago. Not at historical lows, not at historical bounce back zones or support levels, but still, relatively solid. All right. I didn't want to leave it at a completely sour note for Bitcoin. Okay, Max, what questions do we have in chat?
Okay, let's start with the race questions maybe.
Okay.
So maybe let's spend a couple of minutes on DOT, even though we don't have on-chain metrics,
Sure.
and then head over to Mana. And maybe as the last coin, we have a lot of like requests for AXS in chat.
The Infinity coin. All right. Well, that's I think we're migrating. I think AXS hasn't it migrated contracts, and therefore our data is also kind of.
It's true. I think they are on their own sidenet now, something like that.
Yeah. So we'll see what we can show. I think we have more data for SLP, the smooth or small love potion, which is I think the in-game currency or whatever, which is showing some very interesting patterns recently. So maybe we can check that one out instead. Anyway, let's look at DOT. All right, I warned you guys, but you said that you wanted to look at DOT, so let's check out Polkadot. So like I said, at this point in time, we still don't cover Polkadot from an on-chain perspective, but we have been getting a lot of demands for Polkadot. So stay tuned. Might be working on something, might not be. Either way, let's look at Polkadot's other metrics that we have that pretty much nobody else has on the market. Let's start with social volume for Polkadot. So there was this massive uptick in Polkadot social volume on March that I really want to remove altogether because it kind of skews all other data. If we look at DOT's current social volume, it is staying within its sort of established parameters. We have seen, okay, let me change colors here. Actually, let me move from a night mode to a light mode. You will be able to see it a bit more clearly. There we go. So there's been a little bit of an uptick in DOT mentions during the bottom. It happened here and it happened here as well. So it's clear that the crowd is sort of paying close attention to the coin. And this is something that we don't really see a lot for like low and mid cap coins. Which DOT is no longer. It's one of the top caps. When you see these spikes in social volume during bottoms, these types of spikes are usually reserved for like Bitcoin and Ethereum because most of the time, the crowd doesn't care about a coin unless it's pumping. Like if you look at, for example, let's look at, I don't know, Matic, right? Matic is pretty big coin. Recently, it's been one of the most lauded coin as far as its potential for solving Ethereum scalability concerns are. However, if you look at its social volume, it's mostly concentrated around its tops. Yeah, there's been a little bit of an uptick during the bottom, but nothing close to what we've seen during the price rallies. And this is usually what we see when we look at coins that are not Bitcoin and Ethereum, is that social volume typically only rises during price bumps and never or very rarely during correction. So the fact that DOT is actually now, we're seeing some upticks in DOT mentions, even though it's dumping, it's similar to Bitcoins. Like I'll show you. Even if we exclude this one, which is obviously because of that B word conference, look at the previous ones. Spikes at the bottom, spikes at the bottom, spikes at the bottom, spikes at several local bottoms as well, suggesting that the crowd is becoming very aware of each of subsequent Bitcoin's drop, which is something that we see very often. It's starting to panic a little bit. It's starting to suggest that we might be experiencing further corrections. But overall, the crowd is becoming very much attuned to the price action of BTC, as you would expect, because Bitcoin kind of often dominates the entire market. So I'm actually quite I don't want to say surprised, but I guess the better word is impressed by the fact that we are seeing spikes in DOT social volume during bottoms, because like I said, it's usually reserved for BTC and Ethereum, not for other coins. From a fundamental perspective, I think it's great, because I think it suggests that a lot of people are very much interested in DOT throughout its price cycle. From a network effect, I think it's showing a very solid foundation, right? So if you look at the last year of data, yeah, we're going to have this massive, I'm going to ask our devs to just remove it, because even though it's legitimate, it doesn't it doesn't do DOT justice, because what we would see otherwise, let me try and show you here. We would see spikes in DOT social volume around several sort of local tops. So here, obviously here before a consolidation, here before a sort of beginning of this normalization or consolidation, and we've seen it here as well during the all-time high for DOT. We've seen it here, and we've also seen it before this latest drop for Polkadot. However, because of this large uptick in DOT social volume for just one day, it kind of pales in comparison, but it's pretty clear that every now and again there will be a large uptick in social volume for DOT, similar to a lot of coins, when the coin is pumping. And that's what I would suggest. If DOT starts to recover significantly or strongly from these levels, right, and you see this type of an uptick in its on-chain activity, in its social activity, so similar to here, June 13th we bottomed. On June 15th, we hit a local top. Immediately, there was a massive uptick in social volume, suggesting that the crowd was like, super in tune with DOT's general price action, and they were pumping the coin, hyping the coin. It's not a great sign. So moving forward, the thing that I would do is I would probably create an alert for DOT social volume. So you go here, click on Add Alert, and you can say, okay, go to social. One sec. Social volume. And you can say, okay, let me know the next time that DOT's social volume rises by, I don't know, 50%. And we can see how many times that would have triggered in the past. And I could say, okay, maybe 40% is better, or 30%. You can sort of set your conditions based on how often they would have triggered. And I could say, okay, 20% seems like it would have caught some nice moves. It would have caught this one. It would have caught this one. So maybe 25% is better. Yeah, 9 times. There we go. It catches this one. It catches another one. So this time I can create an alert. It's a private alert that will let me know the next time that DOT social volume rises by 25% compared to the day earlier. You can also set up an alert so that it triggers only when the DOT social volume increases by 25% compared to like 7 days earlier, if you don't want to track those micro moves. But in any case, this is how I would sort of track DOT social volume in social activity. We can also look at what one sec. And what DOT's social sentiment is looking like. So here, so far, we were only looking at the amount of mentions of Polkadot on crypto-related social media. So for those that are not familiar with this metric, this doesn't look at social volume for DOT all over the internet. We are only looking at, we have our own social data set of about 1,200 different channels, which includes Telegram channels, crypto subreddits, Twitter accounts that are purely dedicated to cryptocurrencies and other sources of information, and we only scrape data from channels that are committed to talking about crypto. Therefore, I think it sort of filters out a lot of the noise and a lot of the data that we don't really care about. We want to know what the crypto community and not outsiders are talking about every specific coin. So if we look at Polkadot as far from a sentiment perspective, see what we got. The current sentiment towards Polkadot is fairly negative, which I think is good. I think it's fine. Like I said, generally speaking, I am not a fan of elevated or majorly bullish sentiment. We've seen it several times throughout this Polkadot rally. I don't think it's not showing like massive correlations with the price, but even like you can clearly see spiking bullish sentiment, we have a consolidation period. Spiking bullish sentiment, we have a consolidation period. Last spiking bullish sentiment right before the crash and whatnot. Currently, Polkadot related sentiment is pretty low, which I think is fine. I think it's good. I would rather, like, obviously it's not going to be the only thing that determines where the price of DOT is going to go, but I would always rather have very low expectations for a coin than the crowd hyping the coin out of its mind, spamming rocket emojis, pump emojis, and all in general being extremely annoying and extremely cocky about the coin's future price potential. So at the moment, the crowd doesn't seem to expect a whole lot from Polkadot. It seems like it's kind of flying under the radar, which is exactly where I would want DOT to be. From a social perspective, like I said, it's not the only metric that matters, but it's a metric that we have, and I wanted to show. So other thing that I also want to show is the DOT's development activity. It seems like pretty much the same thing that we've seen in Bitcoin, in Ethereum, right? A massive drop in development activity for DOT over the last week and a half. I wonder why that might be. If we look at, not Bitcoin, but Ethereum. If we look at Ethereum, it's pretty much the same time that it started. So obviously DOT's developers might also be in Paris at the moment. They're starting to work on it a bit more now, but they seem to have joined the conference. So yeah, in general, DOT's development activity all over time is super impressive. Let me show you. Last 5 days. Okay, maybe 1 day is gonna look a bit better. Yeah, there we go. Actually, what I can do is I can just take a, yeah, I'll just take a 5-day interval. This is a bit noisy, that's why I wanted to remove it. Yeah, okay. This is what the 5-day development activity for DOT, or development activity for DOT on a 5-day interval looks like. Pretty freaking impressive, right? If you are looking for a long-term investment in a project, if you're sort of a buy and hold kind of guy, I typically like to look at development activity as a measure of a project's commitment to its product. If you see rising development activity, what that may suggest is that the project or the team is working on polishing the product, is committed to staying true to the roadmap that it's set out for. It's probably innovating more. It's probably or more likely to push new features in the future. So development activity is not going to help you a whole lot if you're wondering whether DOT is going to pump in the next day or so, week or so. What it will tell you is whether the team behind the project is solid and whether it's continuing to stay committed to the product and to the coin regardless of its price action. And DOT's team clearly is, right? We can also see how exactly how DOT's development activity compares to other coins. So we can look at here, click on watch list and go to all projects. And what we're going to see here is a list of all coins that are listed on Santiment. And I'm going to remove all of these columns that I don't care about. And I'm going to leave the 30-day development activity for coins. So we've got 94 columns of 20 rows. So let's click on development activity. And here what's going to happen is we're going to see the biggest coins, or the the most active coins according to our development activity over the last 30 days. Sorry, the most active projects by development activity over the last 30 days. And according to our data, Kusama is number 1, Polkadot is number 2, then we got Cardano, Gnosis, Filecoin, Solana, Ethereum, Status, so on and so forth. There are a few caveats that should be said here about the way that we calculate development activity. Number 1, we only parse publicly available GitHub repositories. So if a project's GitHub is private, we obviously don't parse it. Number two, there's a tiny subset of crypto projects that are using GitLab rather than GitHub. We currently don't support GitLab integration, so those repositories are also not included in our calculations. That being said, I think it's by far the most comprehensive overview of development activity in crypto, and Polkadot is doing fine. I don't know where this market is going to go for DOT in the next month or 3 months. However, from a fundamental perspective, it's clearly got a community behind it. It's got a whole lot of people now talking about it, even when it's dumping, which I think is a sign of very strong network effect. And it's got strong development activity. From some of our perspectives, DOT is looking fine. From the perspectives of some of our metrics. All right. Max, what was the other question that we got? I forgot already.
The second one we have is Mana, Decentraland.
All right, okay. A little bit of NFT action. All right, let's see. So, I mean, Mana has been doing some nice things over the last couple of days, a couple of weeks, even really. It's not alone. From a lot of coins in the NFT sector have been sort of pumping or showing relative strength compared to the rest of the market. It was Mana, it was obviously AXS, SLP. We wrote about SLP, Engine, Chili's. Anything within that NFT ecosystem seems to have had a relatively strong performance compared to other segments of the market. So let's look at Mana from a on-chain perspective as it starts to recover from the drop. Let's start with just simply looking at Mana's active addresses, like general on-chain activity. So active addresses, as their name suggests, looks at the amount of unique addresses that are active on a network on a daily basis. By active, I simply mean that are participating or sending or receiving Mana on a daily basis. So currently, we see Mana's daily active addresses hover at around 800, suggesting that on a daily basis, this is a rolling 24-hour metric. On a daily basis, there's about 800 addresses interacting with the Mana token. Now, you might think that that's low. It's not. A lot of coins on Ethereum fall under this category. Some coins that you might think have massive, network interaction on a daily basis, especially over the last couple of months. Number one, that activity has kind of been cut in half almost across the board. And second of all, 800 is, I think, probably puts Mana in the top 30 coins on the Ethereum blockchain. Let's actually test it. Let's see. Let's make sure. So I'm gonna look into our screener, and I'm gonna ask my screener to show me the coins that have more than 800 daily active addresses on Ethereum on a daily basis over the last 7 days. Just to kind of put in perspective how many coins that would be and what those coins are. Because I don't think it's a long list. Maybe I'm wrong. All right. One sec until this thing of mine loads. There we go. So, yeah, I'm going to look at all assets. Well, the entry point is going to be all assets. Market segments, I want to look only at coins that live on Ethereum. That's going to cut this list down to about 1,200 assets, I believe. There we go. So now we're only looking at coins that are using the ERC20 standard. Next, like I said, I want my screener to show me only coins. Let's take the last week. Only the coins that have 800 daily, an average of 800 daily active addresses or more in the last 7 days. So I'm not even sure if Mana is going to be on this list because I don't know if it averages 800 because it's been dropping a little bit over the last couple of days. But let's see. So this is the list. There's a total of 40 coins. No, there's a total of 30 coins. My bad. So that's it. 30 coins out of 1,230 have more than 800 addresses on a daily basis. And some of these are very, very large coins. So let's look at the first 20 coins here. Obviously, we got Ethereum, Tether, USDC, Hex, BUSD. So a lot of stable coins, Uniswap, Chainlink, Matic, all of the heavy hitters. And then at number 17, we've got the Decentraland. We've got AXS here on number 15 as well. So it's doing fine from a relative perspective. 800 is not that low, even though it might seem like it. But that being said, looking at the trend in general, the trend is not that optimistic. We've seen massive spikes, like Mana's active addresses went to as high as like what is this, 8,000. So it's like a 10x drop since the high here on March. Obviously, this is an outlier. Maybe a better, more reasonable expectation is around 3,000 addresses. So we've had a fairly significant drop in Mana's daily active addresses over the last 2 or 3 months. It is not alone. Every coin that I've been looking at on Ethereum has had a similar drop in general on-chain activity. Mana is by no means an outlier, and I think that if the market starts to recover, we are probably going to see some uptick in Mana's on-chain activity as well. But for the time being, there's just not a whole lot of demand in this coin or others, at least relative to what we've seen during the heyday of the bull rally. So from an on-chain perspective, usually sustained price rallies like to see sustained uptick in daily active addresses. Currently, we're not seeing that type of sustainability, not in Mana's active addresses, not in Bitcoin's active addresses, not in most coins' active addresses. Like Ethereum has had a nice little slight uptick in active addresses recently. Yeah, so from here to here, it's still a question, like over the last week, yeah, it's grown. It's still a question whether it's really sustainable. Like if we look at, you can, by the way, you can click, you can hold shift and you can click on a chart and you can see a difference between the two metrics from the 2 points that you are holding. So in the last, basically from July 19th to July 23rd, which is today, there's been a 15% uptick in Ethereum's active addresses. Not bad, right? Now, if you look at Mana, and we look at the last 7 days, let's just let it load. Sorry, my internet is a bit wonky today. Remove the screener. It might be part of the reason why. Yeah, there we go. So okay, this is from the 30th. So let's take, there we go, from 18th to 23rd. Mana's daily active addresses are up about 10%, but it's actually not bad. But it's kind of just ebbing and flowing. Like the general trend is clearly down. So for now, at least, I would hope to see Mana's on-chain activity recover a bit more strongly in days and weeks to come. Now, let's see if there's a lot of people selling Mana from an on-chain perspective. Let's see if there's a whole lot of signals that Mana holders are panicking at these levels and are looking to reduce their exposure in the coin. There's a few metrics that might help us understand this. Number one is exchange inflow. So exchange inflow essentially shows the amount of mana amount of mana that is being moved to known exchange wallets on a daily basis. So we have seen a massive spike in Mana's exchange inflow here on July 9th. And in general, there has been a little bit of an uptick. So let me zoom in to show you. Yeah, there has been a little bit of an uptick in Mana's exchange inflow relative to the May, June period. So, seems like at this point in time, there is a little bit of an elevated sell side pressure for Mana, or more Mana coins being moved to known exchange wallets. We can also make sure that this is true by looking at the supply of Mana on exchanges, which, as you can see, does tend to rise, or has shown a rising tendency, especially since July 7th. We've gone from 29.85% of Mana's total supply to 30.7% of Mana's total supply now living on exchanges. So that might seem low, but that's still like 0.9% of Mana's total supply, total circulating supply, moving to exchanges over the last 2.5 weeks. Not a great sign, to be perfectly honest. Generally speaking, elevated sell side pressure and elevated availability of a coin on exchanges suggests that there's just a propensity to dump this coin, and it suggests a lot of weak hands and people not really being super confident about its price action. So Ideally, what we would like to see for mana is we would like to see a more of a reduction in both sell side pressure and the amount of mana being available on exchanges, which would suggest that there's a less of a supply of mana available to trade, raising the value of each unit of mana available in the process. For now, unfortunately, I mean, not unfortunately, this is not like a nail in the coffin or whatever, but we are seeing a little bit of an uptick in mana's exchange metrics over the last couple of weeks, probably because, like I said, the NFT sector is a little bit more lively. People might be selling mana to go into other NFT projects, maybe going into AXS. I'm not exactly sure. It's not a great signal. Let's leave it at that. All right. Let's look at mana's net profit loss as well. Okay. So mana's net profit loss is at a massive spike here, some type of an outlier. I would need to go into our transaction dashboard to see exactly which transaction has led to this, but I don't have time for it right now, so I'm just going to zoom out of it. And yeah, in general, there's a few upticks in mana's net profit loss, but over the last week, most of mana's mana's net profit loss has mostly been on the negative, suggesting that anytime that the coins were moving on the blockchain, they were largely moving at a loss relative to the last time they were acquired. This is something that you would expect. So it seems like let's plot the exchange inflow for mana. So it seems like the amount of mana moving to exchanges is growing, but the average sort of price at which they are moving, these coins are moving possibly to exchanges, is relatively low to compared to the last time that they moved on the blockchain. So it would suggest that some people are selling mana at a loss, looking to offload their coins. In the short term. I mean, it's not necessarily a bad signal. To be honest, like I said, every dump or sort of every market, every cycle requires a period of weekend shakeouts. So it might be something that's going on with mana at the moment. To be fair, though, this net profit loss is not all that low compared to this June to May period. But overall, it seems like people are not, from a network perspective, from an on-chain perspective, it does seem like people are very high on mana at the moment. If we look at mana's MVRV ratio, let's finish it with that. We're already 20 minutes past. Let's look at the 1 day interval. Okay, so first we're going to look at mana's 30-day MVRV ratio, which is the average profit or loss of all addresses that have acquired mana in the previous 30 days. So mana's short-term holders, they are currently up 11% on their initial investment. So plus 11 on average, all addresses that have acquired mana in the last 30 days. If we look at historical trends, maybe I can even show a bit more. Yeah, there we go. We can see that there's still a whole lot of room on the upside for mana to grow before we can say, okay, we're clearly in a danger zone. So danger zone would probably be, I would say, somewhere around here. So between like 35% and up. These are clearly outliers that don't last for very long. They last for a couple of days to a week tops before we move back down to earth. So anything above 35% is pretty high. Currently at 11%, there is still there's still a room to the upside if the NFT sector continues to recover, to improve, before we can say mana is super overvalued. From a downside perspective, we can see that mana's generally like a support zone for mana's MVRV, 30-day MVRV, is here around like minus 35%. So when we reach these levels, it seems to suggest that mana is relatively or historically undervalued, and there might be a period or sort of a higher chance of short-term recovery. It happened here at the end of May, happened here at the end of June. It also happened here at the March 2020 correction. So after the coronavirus crash, obviously a massive drop leading to a recovery. So these are the levels at which I would be. There's a sort of an interim level here at about minus 15%. Yeah, minus 17% here, 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 here. Several times in the past that mana's that might also be a support level for Mana. At the moment, though, it is technically overvalued according to its 30-day ratio, but it still has room to grow before I would say we're clearly in the overvalued territory. So it's not a bad-looking chart, but it is going to, if Mana continues to pump, it's going to look worse and worse, essentially. And then looking at Mana's long-term MVRV ratio, okay, it's so long-term holders are still underwater, which is great. I mean, not for them, but it's good for the price action, possibly. Minus 10% means that all addresses that have acquired Mana in the previous 365 days are currently down 10% on their initial investment. We can see that historically speaking, these are the levels at which we like basically 100 plus 100% and above is usually a level at which we are clearly overvalued, and we are probably due for a correction. It happened here in August, and then happened here before we corrected in February. Usually, like anything above 100%, it doesn't seem to be a very sustainable level for Decentraland. From a long-term holder perspective, this is the level at which they seem to be known to take some profits in the past. I can actually zoom out to show you a bit more. Let's zoom out. Yeah, and then on a lower end of the spectrum, I think, yeah, Mana obviously has more room to drop before it's clearly undervalued, but it's not horrible. MVRV ratio for Mana is looking fine. It's looking a bit undervalued on a long-term scale. It's looking a bit overvalued on a short-term scale, but it can grow further before we can clearly say it's in the danger zone. From an on-chain, from an MVRV perspective, I think it's in a sort of a limbo where it can, the MVRV can allow it to grow without much efforts. The bigger problem is the fact that Mana's other on-chain metrics that I've looked at so far, and I've only looked at a couple, but they're still already showing me active addresses are declining and the amount of Mana moving to exchanges is growing. The amount of Mana, the average profit margins of Mana being moved on the networks are pretty low, so people are selling even at a loss. In general, it doesn't seem like network-wide Mana is looking all that great. I would, look, NFT sector seems to be probably mainly because of Axie Infinity, but that seems to always trickle down to other coins. So in the next couple of days, I would keep an eye on active addresses and things like exchange inflow for Mana, especially if we see a decline in sell side pressure for Mana, like we're already seeing a little bit. If we see a decline in sell side pressure and a rise in daily active addresses, I think that's a pretty decent divergence. More addresses interacting with the coin, less addresses looking to sell the coin. A win-win scenario in my book. That's not still what we're seeing, but that's the type of setup that I would look for a potential entry position. Obviously not financial advice, just something that I sometimes look for on the charts. All right, that's gonna do it for us today, guys. We're already 25 minutes overdue. So thank you everyone that stuck around until this point in time. Brian, anything to add before we kind of sign off?
No, nothing significant. Thank you all so much for joining. We'll continue to be uploading more and more YouTube videos, so look out for plenty of stuff in between these calls every Friday, where I'll be, going over the market. Sometimes Dino, sometimes another member of the team, and we will do our best to give you some of this analysis in between all these live calls, because we've heard, that you really enjoy them and want more. So we will be providing those. Use those referral links. Tell your friends and family about Santiment, and we look forward to giving you another update in a week's time.
Thanks, everyone. I think, Max, if you want to flash the discount code for people that are still not Pro subscribers to Sandbase. So once you subscribe to Sandbase Pro, you get a 2-week trial to test everything on our platform, all of the metrics that we've talked about today, as well as many, many, many others and other features as well. After that, it's just $49 a month. However, there's a 25% off for people that are watching this stream and enter a code TWIC, which stands for This Week in Crypto, during checkout. So if you want to get even a slightly better deal, make sure to use that code if you're not already a Sandbase Pro subscriber. If you are, thank you, and make sure to join our Discord channel, where we have a special group, Sandbase Pro, a group where we talk to our paid subscribers or paid users about the market in general, and sort of share different charts that we're looking at on a daily basis. So that's going to do it for us today. Guys, thank you all so much. We'll talk to you all in 7 days. All right. Take care, guys.